Redefining Investment Portfolio in the Age of Intelligence. Well, what that looks like is what we're going to find out with our moderator, the founder and editor of pathfounders.com, and for the editor at large at TechCrunch. He's going to be in conversation with Paul Palandjian, the Chief Executive Officer and co-general partner at O'Leary Ventures, which is, of course, Kevin O'Leary's global investment platform. And he oversees all sorts of investments for Kevin O'Leary, including, of course, the investments that are made on Shark Tank. And he also leads the development of Wonder Valley, the largest purpose-built AI data center campus on Earth. So please give them a warm welcome. Here's Paul Palandjian and Mike Butcher. Welcome! Come on, let's clap up. Let's make some noise, please. Welcome. Great to have you with us. Welcome, Mike.
Let's see, I think we are missing a clicker. Did you get the clicker? Well, let's have a seat and we'll organize it. Aha! So we're going to do something a little bit of fun here, and we're just going to open up the conversation with a video about Wonder Valley. Over to you, Paul.
I don't have sound.
Oh, yeah, it's okay. It's well.
There's a valley where technology and nature will come together in perfect harmony, where the future will pulse at every turn. Bursting with nature and wildlife, nurturing the present as it embraces the future. A valley where the brightest minds unite, where electrons, machines, and data come together in an algorithmic dance. Wonder. It's not just a name, it's a mission. A data center campus that will sustainably marshal in a new era of innovation. The single largest AI compute data center park on Earth. Nestled quietly within 7,000 acres of forest land with trails, wildlife, and recreation, and beauty. Welcome to Wonder Valley. Yesterday is history. Tomorrow's a mystery. Let's shape the future together.
Amazing. Well, that is quite inspiring. When can I move in? Well, are you selling condominiums, apartments?
We're going to have a whole town center in Wonder Valley, yes.
It's absolutely incredible. Oh, we've got the slide up there, so it's very interesting. So without wanting to telegraph the conversation too much, obviously we're talking about a very, very large hyperscale AI infrastructure. Let's sort of zoom out and sort of chill for a second. Quite clearly, in any revolution and any gold rush of this nature, it's the picks and the shovels which really win out. You're clearly building a very large facility, but what do you think sets it apart from other ventures? Because, for instance, France is building a gigawatt facility right now. There's huge amounts of investment going into the Middle East and UAE, for instance, and Saudi. The US has got its big facilities coming on stream. This is in Alberta and Canada. What do you think is going to set this apart from the others?
Sure. I think, and it's nice to be with you all today, there's a couple of mega trends that are taking place. If you've been at the conference and if you've been over at the Trade Center, then you're hearing a lot about it. The worldwide demand for AI compute is growing at a massive level. And to give you a little historic context, worldwide purpose-built AI compute data centers, as measured by power, is probably only 30 or 40 gigawatts today. And Pang, the leader of G42, estimated, I think 2 years ago at the World Economic Forum, that the worldwide demand was 100 gigawatts. Last year, he adjusted that estimate to 200 to 300 gigawatts. So what's happening is, whereas even 24 months ago, the hyperscalers were happy to find a data center that had 20 megawatts, 50 megawatts, 100 megawatts. All that's changed. Elon Musk changed it all when he found a way to stitch together 100,000 GPUs into a singular brain, which requires more power to drive those computers. And now that singular site in Mississippi is 250,000 GPUs. And most of the hyperscalers are now scrambling to catch up with goals and targets of stitching together 1 million GPUs. So what does that mean? If you're in the data center business, you're in the power business. And nobody really knows where this is going, although most of the hyperscalers are out in the market today with an articulated demand for a singular campus with a minimum of 5 gigawatts. And they're telling people like us, and we need to be able to scale up from there to account for this growing demand. So it's massive, and it's geopolitical. You've got the US, China, India, and the UAE, who are all leading in the development of these technologies, in the creation of AI, in this productivity revolution that's taking place. And so you have to have the infrastructure to be able to drive this advancement.
Well, it's obviously a project with huge, implications. But you talk about power. Now, other countries are investing in things like renewables, wind, solar, tidal, recycled power in some way, and nuclear, of course. And you're talking about leveraging 3 trillion cubic feet of natural gas. Number one, doesn't that make it environmentally problematic? And number two, what's putting you off other kinds of power sources such as renewables?
It's a great question. And, all sources of power are not equal. One of the things that's driving these hyperscalers, these big tech companies, of course, is they want to be responsible stewards of the environment. They want to be sustainable and clean. And so the request, when they're on grid buying power from the utilities, is we need at least 30% renewables as a component of the power we generate. That's a little bit of greenwashing, because at the end of the day, they're receiving power from the utilities, and the utilities are saying, yeah, some of this is coming from wind and solar. But their requirements are what are called 5 nines. To operate a modern-day AI data center, you need to be up 99.999% of the time. You cannot be down. You cannot have power outages without failing your customers ultimately. So wind and solar tend to not be as reliable. You need power, you need backup power. So for us, when we look at...
So it's the redundancy aspect.
It's the redundancy.
Right.
Redundancy, reliability, you have to overbuild the power. That's why if you're looking at our chart, you see 12 gigawatts, you say, that's an enormous amount of power, but that's only going to net down to slightly less than 9 gigawatts of IT load, because that you need to build the power in such a way that it's concurrently maintainable. You take things out of commission, you maintain them, you put them back in, but you can never be down. So we have a strong conviction and a macro thesis that off-grid power with the use of natural gas is a very low-cost and efficient way to generate power. The way that we'll be responsible stewards of the environment in a project like this is through preserving a large portion of the forest, and also by installing carbon capture sequestration, which the geology in this location allows for. When we looked at it, we looked all over the United States, we looked all over Canada, and we found 2 places where there is an enormous amount of stranded natural gas. In other words, the gas is there, but it's got nowhere to go. There's no customers for it. They're fracking, they're taking oil, and it's creating a lot of natural gas, and there's no pipeline infrastructure. So we're going right to where the molecule is, and our thesis is we're going to take that gas molecule, we're going to convert it to electrons, we're going to convert those electrons into tokens, and we're going to send those tokens out through fiber optic networks across the globe.
So well, you've obviously put a lot of thought into it. Is there a macroeconomic issues around, for instance, if Canada tightened methane rules or carbon pricing escalated, or have you built that into the model?
Yes, we have, and we take very seriously that, well, there's a carbon tax, so how you generate that natural gas power matters, and you can do that in a way, again, that kind of minimizes the cost. All of this is achievable with very low carbon intensity. If you look at this map above of our master plan, that whole lined area is our power strip, and next to every power plant will be a carbon sequestration solution as well. And we think we can get maximum 98% carbon reduction from this project. And part of that will be driven by the demand of our ultimate off-takers, the big tech companies.
So obviously there's a financing aspect to this, and I gather that you talked about something like $70 billion over a decade in terms of investment. So what's the sort of kind of equity versus project finance or equipment-backed debt, or what kind of financing arrangements are you putting in to achieve this?
Well, we right now are capitalize all of the pre-development costs. So all the design, engineering, permitting for the project to get it shovel ready. There's in the financial markets right now, there's a little bit of a chicken and the egg. In other words, you can't build new power unless you have an offtake. If you're not selling it to the grid, then a banker or an equity investor is going to ask you, well, who's going to be the offtake to de-risk the cost of developing that power? So you need to have an offtaker to finance the power. Okay, and then for the power provider, there's a chicken and the egg saying, well, we're not going to generate power unless you have a hyperscaler to come sign a lease with you on a long-term basis to be the offtake for the power and to occupy your data centers. So what we're doing is we're working creatively with banks and with institutional investors, many of them from this part of the world, to solve those issues. We're going to finance it ourselves, de-risk it, and then there'll be a moment in time at which the hyperscalers will come off the sidelines, be willing to bid and sign a letter of intent and a long-term lease, and that's the moment in time that you can readily get debt financing and equity financing. And ultimately our goal is to take this project public in the next 12 to 24 months. So,
but I saw your speech yesterday at Dubai World Trade Center, and you mentioned that things would, power projects like nuclear or renewables are just too slow. This is a lot faster approach, and obviously the likes of Google and Meta and others all want these kinds of things to be on stream as fast as possible. What's to stop an existing hyperscaler or data center approach right now that's out in the Mojave Desert or wherever it is right now that exists, just tacking on some more land, tacking on some more buildings, and then just achieving kind of, the kind of scale that you're trying to achieve, but that might take maybe a couple of years to come on stream?
It's a great question. All of the hyperscalers themselves are now in the power and data center business, and they're scaling up their teams. But there's huge bottlenecks, and they tend to be folks who are used to creating software, not large CapEx infrastructure projects. And so they're also partnering with the private community like ourselves and real estate developers. But not all land, not all locations are equal. And there's 4 things you need to build a modern day data center. You need power, you need ping, you need a fiber optic network to be able to send those tokens across the world. You need people. You need to be in proximity to a highly skilled workforce that can run and operate and maintain these facilities. And you need great policy. So various jurisdictions around the world have various civil justice systems and laws and regulatory environments. From the US and North America's perspective, it's highly friction-filled with regulations, and that puts them at a competitive disadvantage with this part of the world and with China. In China, they're building 650 new coal-burning power plants. That's almost outlawed in the United States right now. So you have to think about where is this going. And then likewise, Africa, while there may be readily available land for these things, there's issues of data sovereignty, data security. So ultimately, we think North America will be the winner that prevails in this, but the big snag is we're out of power. Somebody has to come create a lot more of it, and the US and Canada need to lower their regulatory standards in order to prevail in this digital arms race.
Well, yes, absolutely. It is definitely a digital arms race, but also we're very much kind of at the beginning of it, and to some extent, and the software aspect of it, the AI application and LLM aspect of it is also very much in flux. Samsung recently announced a new model which was extremely far more efficient, smaller, could do a lot of the stuff that maybe some of the early LLMs could do, but at a vastly lower amount of power. Is there a kind of a black swan that might come along and go, you know what, you don't need so much power, you don't need so much data centers? Would that collapse the prices? Would there be a massive adjustment? Or do you really feel, and you're super confident, I presume you are, that this is a generational moment when we're going to need this power and this capability?
Yeah, we see this as a 50-year mega trend that will not abate. The demand for power. Imagine a world in which you're up in a satellite looking down on Earth and there are data centers sprinkled everywhere. You know, the amount of data that is going to go into this. So with increased efficiencies, whether it's chip technology or whether it's the models themselves using less power, there's going to be a voracious appetite to input more and more data. And that's why we're also aligning ourselves at the infrastructural layer with software solutions that can orchestrate the data to create those efficiencies. We partnered with a company locally called Kiros and with Sencor. Sencor is one of the premier data center security, cybersecurity, and managers in the world. They handle all of the US Department of Defense data centers. They handle Microsoft and QTS on the commercial side. We're creating that orchestration layer as well that can organize, correlate, segregate, and provide for better inputs into these models to create those efficiencies.
Obviously, you're putting this into Alberta. You're also, I presume, I think you mentioned you were looking at sites in the US as well. What are kinds of, give us maybe a preview of some of the conversations you've been having here in the UAE. I don't know, perhaps you've been talking to Saudi. I mean, it's up to you if you want to tell us any more. But how do you see the Middle East and MENA, working in concert with what you're doing in North America?
Sure. First of all, I have to say that when it comes to AI, all roads lead through the UAE. Okay? What's happening in Abu Dhabi and Dubai with the leadership, which is more visionary than anyone in the world, that is not impeded by a highly regulatory environment, is incredible. And the investment is unfathomable. And it's also because this is an oil and gas economy, they are the power experts in the world. And as a result of the investments made by Abu Dhabi and Dubai in the major power companies, whether it's Siemens, Mitsubishi, Global Foundry, Taiwan Semiconductor, they control a lot of the supply chain. And one of the biggest impediments to executing successfully on a data center project is there's a worldwide shortage of everything from high voltage wires, mid voltage, low voltage, substations, transformers, UBSs. Well, guess what? These guys control it. So I'm here a lot. My chairman, Kevin O'Leary, my business partner, who's a celebrity global investor, we're working hard to try to partner locally. And even the company, a Dubai company, Dutco, we're in early talks to be the carbon capture solution at Wonder Valley in Canada. So I would say everybody else is a distant second place. Qatar has just jumped in the game. the Kingdom of Saudi Arabia. These are great, very sophisticated institutional investors who are placing big bets in AI, but they're way behind the UAE. UAE is number one.
I can't let this pass without mentioning, you mentioned Kevin who's working, Kevin O'Leary, who's obviously terribly famous for being in Shark Tank, but obviously a very experienced and long-term investor himself, and entrepreneur, by the way, technology entrepreneur. I'm sure it must be very interesting working with him. But, you know, I suppose maybe a couple of years ago, you probably weren't really so expert on how this power and combination of power and AI and LLMs and GPUs were happening. Do you feel like you're at any disadvantage against the sort of the super geeks out there and the Sal Altmans of this world, or do you feel it's anyone's game right now because it's still so early?
You know, it's a great question, and to your point, our core competency are capital markets. We're great private equity and venture investors. But 24 months ago, I didn't know what AI was. The good news is nobody did. So we're all on an even playing field, and we're rapidly going up the learning curve. What we do know is how to manage and execute on complex real estate development projects. And we have hired the best and the brightest in the world to help us execute. And we're out there learning just like all of you. So I'm highly confident in our ability to execute on this project, but I will say that the only certainty right now is complete uncertainty. And we all ought to embrace that. And in the future, and I think a few of the previous speakers mentioned this, the only competitive advantage will be the rate at which we change. One of the speakers talked about you have to learn, unlearn, and relearn. That's what's going to be happening. And so we all have to be open and flexible and step out of our comfort zone, work hard to learn new things, and then think big and bold and go for it.
Well, certainly I look forward to visiting Wonder Valley when it's up and running in a couple of years. It's super exciting and very interesting to see how this level of ambition is really incredibly high. But ladies and gentlemen, unfortunately, and we could talk about this for hours, but unfortunately we're out of time. But please give it up for Paul Palandjian, who's CEO of O'Leary Ventures, and from me, Mike Butcher. Have a good conference.